Let's look deep in the week to the Jackson Hole event. It's been virtual the past couple of years. I suppose some people are going to be there this year. What are we expecting out of that?
Well, I mean, I think that you're going to hear a lot of Fed officials speak at Jackson Hole, so it's not going to just be Powell, right? But I suspect, Tyler, he's going to sound, this is Powell, I think he's going to sound hawkish. I think a lot of the Fed members are going to sound very hawkish because, quite frankly, inflation is everywhere. And so that's why this week is so interesting, because we do get a couple of reports that will actually show us that exact thing, that inflation is still very persistent. So within the GDP number, the second revision number midweek, we also get the chain price index, and that's going to be up something like 7%, down from 7.5% year over year, but still a very hefty number. And then, of course, you get the core PCE number on Friday, along with Jackson Hole, and the year over year number, again, it comes down a bit to 4.7% expectations, but that's versus 4.8%. But the Fed wants that number to be 2. So I don't know how they're not hawkish, quite frankly. And I really don't think that this pivot move that we saw from the June lows, I don't think it was pivot. I don't think they pivoted at all. And
core PCE is the measure, is it not, that the Fed allegedly pays the most attention to. Without getting in touch with our deep inner wonks, what's the difference between core PCE and some of the other maybe less esoteric versions of measuring inflation? What makes the core PCE different and so important?
I think it's less volatile for one and it's broader for two. So I think that's why they like to look at core. Quite frankly, I don't really want to look at core. I want to just look at the headline number, because I don't know about you, but food and energy are a real problem these days. Even with oil coming down, right? There are still stresses to the consumer.
Yes.
And so I just think that the headline number and the core number, it's all high. And that's why they have to raise.
Stephanie, I want to get your take sort of on what's going on in the broader market right now. I mean, it does sound like you are concerned about what's going on with inflation. Those concerns haven't gone away. But to see the NASDAQ down more than 2% right now, does that feel right to you? The sentiment feels very negative, and I'm not exactly sure why, especially today.
Yeah, well, we've had a lot of data over the weekend, right? And between the war in Ukraine and the bombing and of Putin's right-hand person's daughter. So that kind of sparked it. We have ports shutting down in the UK. And so you have now, again, supply chain issues potentially. And then, of course, you have interest rates. Interest rates are backing up, right, over 3%. That's not good for long-duration assets, Courtney. You know this just as well as I do. Mm-hmm. And long-duration assets are technology and growth stocks, so they're getting hit the most. But by the way, they rallied quite a bit off the June lows.
So let's dance through a couple of names that you have your eye on this week with some earnings. Nvidia, and then two sort of retail names, I guess, is Dollar General and Ulta. Ulta seems to punch above its weight on portfolio managers' lists. I hear it mentioned a lot.
It's such a good company. It is such a good company. Well run. They have the right products. They have all different price points, low, medium, high. They have the prestige theme as well. So they're capturing a lot of growth. And the only problem, Tyler, is it trades at 20 times earnings. So, but we know Elf had a good number. Estee Lauder in the United States had a very good number. And so I think they're going to be able to do something like a 10 to 12% top line number when most are just putting up mid-single digits.
Quick thought on Nvidia before we change subjects here.
Yeah, no, I mean, I think Nvidia, look, they negatively pre-announced, right? So we have the numbers. We just want more of the macro color commentary. We've been hearing all quarter long, PCs are weak, gaming's weak. It's terrible. So we want to know how bad is it, and is it getting any worse? On the flip side, enterprise data center are actually growing quite nicely. So I just want to hear more about what the macro tells are from the company versus the actual numbers. I don't expect big fireworks.